Hello, everybody. Back. We are back. It's Friday, June 3rd. Friday afternoon, San Francisco. Sleepy time. Seems one of those weeks where not entirely sure whether the news is good or bad. And Keith has decided that he's going to wake you all up by telling you whether or not you should sell or buy. Is it a buy or sell week, Keith?
Depends what you're buying and selling, Andrew. As always,
Oh, Keith, you can't. You got to be more decisive than that.
buy the future, sell past. I think is
Well,
the
that's always the case. When would you ever want to buy the past?
people do. People do. I mean, think about no one gets fired for buying IBM is still a phrase, but it's not a good decision anymore.
Does IBM even exist?
Well, that is a debate that people at IBM are still having with each other, but definitely
That's a
there's
philosophical issue.
yeah. What's their supercomputer called? Jeeves or something.
No, I
Sherlock.
was just talking about what?
Sherlock.
No, not Sherlock. Yeah, talk about. I can't remember what it's called. I was just talking
Watson.
about
It's
Watson. Yeah, another
Watson.
waste of money. But in 50 years, I guess Microsoft and Google will still exist, will they?
Microsoft and Google, I think they will actually. Yeah, I do believe they will. But not.
So you spent the last 2 years telling me that Tiger Global was the future of the venture and why everything was going to be like Tiger. And Tiger is down 52%. So I would assume that the news isn't really that good, Keith.
Well, this is in my bad news section. I will say there's about 15
That's like
articles.
saying, well, the world has ended. That's in my bad news section.
Yeah. However, there are only 3 articles in my bad news section this week, and there are like 12 in my good news.
Yeah, and
section.
one of them actually is good news for everybody, I think.
In the bad news
The
section.
bad news is Tiger down 52%, which is bad news.
That's one. The
15,000 tech layoffs, which is definitely bad news. And then Sheryl Sandberg leaving Meta. I think that's good news for everybody.
Except
News for Meta. It's good news for Sheryl Sandberg. It's good news for us. We don't have to hear about her anymore.
I don't think it's good news for Meta. She is an extremely competent chief operating officer who, despite all of the, having to sail the ship through stormy waters, she's pretty good at that. Nick Clegg would be my, good news if he left.
Well, I think if we were satirists, I am, you're probably less of a satirist, Keith. The idea of Nick Clegg running Meta is about as absurd as you can probably get. I think I would do a better job than him.
Yeah. It'd be like Tony Blair running Google, right? I mean,
yeah. Or it's like Nick Clegg running Man United.
Well, we've had worse.
You've had worse, that's for sure. That German you had was probably worse than Nick Clegg.
Yeah. So Tiger is down 52%. And if you go and look at the graph on the the Bloomberg website, where is that? There is a graph.
It's not, Keith, I have to correct your pronunciation. It's not graph, it's graph.
Well, in Yorkshire, it's graph. And graph and graft. Here's the month by month. Minus 15 is this number here that my mouse is hovering over. So you're basically looking at a pretty consistent month by month decline.
So Keith, let me be frank here. As a Yorkshireman, you appreciate frankness. How have you fucked up so much with Tiger Global? Don't make any excuses. What did you get wrong about them? Because you kept on telling me that they're everything, they're future, they're brilliant, and all blah blah blah, and they're down 52%.
I could just cry and admit that you're right. However, satirist as I am not, I will say this. I think my main narrative about Tiger still holds true, which is what Tiger represents is hedge funds and private equity funds invading the venture space to the detriment of the incumbents. And that remains true. Tiger has done more deals so far this year than anyone.
Yeah, but so what?
Well,
I mean, they've obviously done bad deals. They're pouring good money after bad. They clearly don't know what they're doing because the traditional venture firms, Andreessen or Sequoia, they're not down 52%.
Well, we don't know because unlike Tiger, they don't have to report that. But I would guarantee that they all are down substantively because the way it works is when the public market cracks, the private companies' multiples that you value them at shrink, as we've talked about in previous shows. And funds have a duty, their auditors will make them this, to revalue their assets at least once a year, if not more often, if funding rounds happen as such. And a lot of the funding rounds that are happening, we saw this last week in the A rounds, where the number of deals has shrunk, but the money in has stayed the same, are being done at reduced valuations. So venture funds.
Okay, so I accept that, blah, 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 blah. But 52% is a significant amount of money, Keith, a significant number. Does this or does this not disprove the Tiger model of this heavyweight sort of playing in a middleweight space and coming in with so much money that they buy up the entire industry, essentially?
No, it doesn't, because just do the math. I'm going to guess that they were up 500% as of December. So minus 15% from 500%, 5 times in a row, and you're still significantly up. So they're down from a peak, but they're not down compared to the price they paid for the stocks they own. They're just down from the peak value of those stocks.
So why is it bad news?
It's bad news because it's never good to be down, right? Even from an up. And by the way, the whole market is adjusting in line with that. But Tiger is continuing to invest, probably at lower valuations. And by the way, it's investing earlier as well. But it is continuing to invest. I track. Maybe I can show you this if I can. I was on a call just before, and there's a slide. Yeah, I can show you this. Let me show you this. This is about Series B rounds in 2022. I've got to change what I'm sharing in order to be able to do it, but it's fascinating. This is a sneak peek at some of the behind-the-scenes stuff at SignalRank. This is Series B's year to date. You all know that we have this algorithm called GP Rank. So this is 34 companies raised Series B's led by a top 50 GP Rank Series B investor. 62% of those rounds were done by Tiger, Sequoia, Accel, Lightspeed, or Insight. And the total amount of capital that SignalRank could have put into those rounds is nearly $250 million. Those companies, those 34, they will at least 6x over the next 5 years, and they could go as high as 100x. So that 253 million, times it by 6 or by 100 or somewhere in between, that's the value of
well,
that.
They could, but with 100x is anything could. It could snow here tomorrow. It could, but it won't. I mean, it's possible it could go down by 50% as well. I mean, didn't you hear what Rubin said this week about the storm on the horizon?
Those particular companies, it is not possible at all that it will go down. That's based on a machine learning algorithm that absolutely
based on a
what? Basically artificial intelligence applied to data. Those companies.
What does that mean?
So those 34
I've heard
companies.
That one before. That's what they said about those cryptocurrencies that dropped 99%, that they can't fall.
Well, look, if I tell you that either Manchester City or Liverpool will win the Premier League next year because of how much money they're spending on players and what the average stats are of the players and how good the coach is, you'd say, yeah, that makes total sense. Well, that's just...
But that's not guaranteed. I mean, it's possibility that Chelsea could win it. It's possibility Manchester United could win it.
Yeah, but if you go out to 10 seasons, the likelihood is, the
probability... Yeah, but you're asking about next year, not 10 seasons. So
yeah, so well, I'm going to say the data that throughout these 34 companies, because the number of B rounds done since the start of the year is, north of 1,000. These 34 are selected by an algorithm as being they have some characteristics that makes them stand out, which I won't go into.
Well, enough on Tiger. So you're basically saying that Tiger isn't really down. I'm slightly dubious of that. What about the 15,000 tech layoffs? Those are real. You can't start doing pluses and minuses. There are real people who have lost their jobs, right?
Yeah, those are very real. We can go down again to the bad news. This is Hunter Walk who published this piece. We can go through.
I mean, everyone's cutting. I may have been too late. Musk talked about cutting 10% of Tesla.
This is, by the way, just 1 month of layoffs. If you do the whole year to date, it's probably double that.
Are they going to find work again? I mean,
they will find work because they're all skilled people, but the ocean that these guys are surfing on is the ocean of venture capital. And if venture capital is slowing down, which it is, we already know that, not drying up, but slowing down, then the number of jobs that could be sustained based on it is declining.
And in the winners here, there was a piece, I don't know if you linked to it in the newsletter, I think it was in the Journal, about how the big winners this week are the Googles and the Apples and the Facebooks, who can continue to pay very high salaries. And so there's no competition with startups who are either laying people off or not able to match them. Is that fair?
It is fair. And I also think it'll play into the hybrid working narrative. Neither Apple nor Google want hybrid working. They want people back in the office. Elon Musk this week tweeted, if you don't want to come into the office 40 hours a week, you can pretend to work somewhere else.
These companies need enforcers. They need police people to force people back in the office. What happens? I've heard at some of these big companies, people just aren't going back. They won't. So what will happen?
Well, layoffs are going to change the algorithm there, aren't they? Because if there aren't other jobs to go to that are remote,
due to people layoffs, won't risk their jobs.
Yeah, so I think that
okay, so that is bad news. Tiger is bad news, even if you won't acknowledge it. And then very briefly again on Sheryl Sandberg, is it good news for her? Kara Swisher wrote a good piece. I've never understood why she stayed. Every time I've ever talked about Sheryl Sandberg for about the last 10 years, I've said very clearly, why is she there? Why do they keep her, firstly? And secondly, more importantly, why would she want to be there? She's a wealthy woman. There's no reason to be there. So the penny, if you like, I'm not sure if that's the right term, has finally dropped with her.
Yeah, the only experience I've got that helps me try to understand it is I had a chief operating officer at Real Names called Mary Burnside, and then Terry Holbrook, who you know.
Yeah.
Two strong women, extremely strong women, who did a fantastic job facing inwards to the management team and running the business for me, which I was really not very good at. And I was much better facing outward, telling the story and the narrative.
You were worse than not very good at, Keith.
Probably worse than not very good at. So I completely relied on them, and they were really, really good at doing what they did. I suspect Sheryl Sandberg's the same. She certainly looks to have those attributes. Yeah. And I think Facebook will be weaker for her leaving because it's hard to replace people like that.
Well, and Zuckerberg will be more exposed. And I don't know what it... Certainly this whole shift to Meta is a big bet. It's an interesting bet. Okay, so enough bad news. What about the good news?
Well, let's start with the fact that in May 2022, with the markets crashing all around us, there were 34 new decacorns.
You say this every week, but this is all theoretical, right? There aren't IPOs.
Yeah, but that Andrew,
we can call that was the week a unicorn. Who's going to tell us we're not?
This is where I have to educate you about investing. If you wait till the IPO, you don't make any money. The way you make money is you get in before the IPO. So this is very meaningful because it's early in the journey where the multiple of the money you invest is going to be potentially decent. Anyway, you can see it's less this month than the previous two, which were less than. And if you look at this as kind of a conveyor belt, going back to 2020, and then it jumped up halfway through the year, then it jumped up again in 2021. It stayed there in 2022, and now it's coming down. So looking at the pattern, it's probably going to be 24, 23, 24, maybe not in June, but by July, August. So you're getting back to roughly what it was like in 2020. The good news,
do we have any generalization about which industries, which sectors the unicorns are most successful in?
You have to click through and look at the Crunchbase Unicorn Board, which is an excellent resource, and actually go to the company lists. And unfortunately, they don't organize it.
Mostly it's not crypto, is it?
No, it's mostly not crypto, although there is some crypto in there. And there's some bad companies. Look, Joule is a unicorn. The blight of our children in high school.
Yeah. So okay, so we've got some new unicorns, which is every week.
More realistic good news is that Salesforce.com did its financial results this week. It grew by 24% year over year, $30 billion in annual recurring revenue, and it's projecting that rate of growth will accelerate to 30% by the end of the year.
Yeah, so and they're a plumbing company, aren't they, Salesforce?
They're a plumbing company, so the world would believe that this speaks to whether or not there'll be a recession in tech. And Salesforce is saying no, there won't through its numbers. So that's a big deal. And Jim Breyer, who is a legend in the Valley, but now lives in Austin, Texas, was on CNBC saying that startup valuations are highly attractive. Why? Because they've come down.
Why would he live in? Why would a man who could literally live anywhere in the world, why would he live in Austin, Texas?
I don't know the answer to that question, fellow Austiners, but maybe you can weigh in and tell us. I suspect it's personal reasons. Maybe he has a wife or a girlfriend or boyfriend or...
I mean, I would have thought that any significant other he could move. He's a wealthy man, very wealthy man. So, but he's actually a nice guy. He's always at the TechCrunch, not TechCrunch, the Techonomy event. So
I was going to say, maybe he's just a very humble man who doesn't insist on being followed by his other half, but follows them.
Okay, so startup values are still highly attractive. Well, they're more highly attractive now than they were last week.
Highly
they're cheaper, aren't they? What are you seeing with your signal rank? You seeing a significant deflation, or I don't know if the right word is reduction in price?
We can only imply that because the valuations are never reported. The only thing that's reported is the amount invested, and then you can get anecdotal evidence as to what people are paying for how much stock. But yeah, I think prices are coming down, and less deals are getting done.
Okay, and then and so I mean, I'm not sure if this is necessarily good. It's not good news for the public markets, but you say wealthy investors are piling into private equity. So I guess that's. Are they competing with venture, or are they putting their money into private equity companies, or directly into?
It's both.
Funds or individual companies?
It's both. So private equity is an umbrella term for venture capital, leverage buyouts, direct investment in private companies. There's a whole bunch of stuff under there. Venture capital is only a small percentage of it, like 10% or less. But but it's counterposed to public markets. So this is Tiger Global is private equity. So when people put money into Tiger, they're doing this. So this is the Wall Street Journal.
That's not very good news because Tiger's down 52%. So it's not good news. What's good news about that? They're losing their money.
So yeah, well, so this is the quote: an asset class with longer-term investment horizons, whose job is to allocate capital over time, becomes an attractive proposition in a downturn. So you basically,
we all know that. I mean, we don't need to come on That Was the Week to figure that one out. The question is, as always in these situations, are we in the middle of the downturn, at the beginning or the end? And nobody knows. Do you have any sense?
I think it's very likely there isn't going to be a downturn.
Well, I mean, there is a downturn in current market.
In stock values, yes. But I think there's a chance that there is no recession, and therefore there will be sentiment will recover. Sentiment.
And what about the looming hurricane, in Robert Rubin's words, on the horizon?
Many people think he's wrong. We'll see.
I think his argument, which is an interesting argument, which makes sense, is that consumers are operating on fumes at the moment. They got about 6 to 9 months left, and then they're just going to run out of money. And then everything changes, and then the consumer boom, which drives every boom in America, is just going to end. Money's going to be more expensive. People are going to get more and more nervous with inflation as well. People, I mean, that's the only thing, I guess, in inflationary times, you spend your money because there's no point in saving it.
The US consumer is the opposite. Savings are at an all-time high, and spending is very robust. But that's just US. That is not true anywhere else in the world.
Well, one more piece of good news, which is one of the more absurd pieces I think I've ever heard. Firstly, because it's not good news or bad news, it's just no news. And secondly, because it sounds so ridiculous, is Chipotle accepts crypto as payment. Firstly, why would you want to pay for a burrito in crypto? And secondly, you've always told me that crypto isn't currency. So how can you actually pay for a burrito in crypto? And thirdly, who cares?
I think I agree with all of the above. I put it in for fun value, this story.
So what does that actually mean? You can walk into your local shop, into your local Chipotle, and buy a burrito in crypto. What does that involve?
Well, so you have to have this app called Flexa. That's the condition. So you install the Flex app and you spend some money on crypto in Flexa, and Flexa presents itself to Chipotle as a payment mechanism. So whatever crypto you've got gets sold.
You told me it's not a currency. You told me it's something else. Why would you buy a burrito with crypto?
No, I told you Bitcoin is not a currency.
But what's cryptocurrency?
Any. Chipotle will take any.
Yeah, but Bitcoin is basically the same as the others.
Yeah, but you'd be a fool to spend your Bitcoin at Chipotle, but you might not be a fool to spend Solana there, which just went down.
To spend what?
Solana, SOL.
Why?
Well, because its future value may be less than its current value. Therefore, it's a good idea.
Instead of spending $7 for a burrito, you'll get it for $6.50.
Exactly, and a year from now, it'll look like you got a bargain because you'd have to pay.
That is truly good news for the millions of people out there who want to use cryptocurrency to buy a burrito and a soft drink for their lunch in Chipotle. Enough good and bad news, Keith. I think I agree with you. It's been a good and bad week. Yeah. What about essays of the week? I was intrigued with your young, rich, anti-capitalist essay. It sounds like a new movie.
Yeah, there's two in this week. I only put stuff in that's a longer read and gets your brain churning. But the one about the young rich anti-capitalist is making the point that startup founders who become millionaires, who are millennial or Gen Z or Gen Y, continue to hold the belief systems of those generations. And those belief systems, generally speaking, are they're believers in equality and opportunity, and
you believe in all those things, Keith. I don't see you giving all your money away.
Well, they're not giving their money away, but they're putting it into what they call transformative investing, according to.
Is this the same as social capitalism?
Which
a lot of people think is a scam.
Yeah. It's a close cousin of that. They talk about things like racial justice and the deeply unequal pandemic that killed more Black and brown people and working class people than others. So they're focused on social good, even though they're rich. That's the story.
The thing I looked at it, and the thing that intrigued me was the idea that people who are worth $1 million are rich. They're not.
No, well,
I mean, you talk about millionaires. That may have been true in the 1920s, but you're only really. I mean, how would you define rich? How much what you'd need to be worth? 50 million, 100 million?
I think it depends where you want to live. I think you could be rich.
Say you want to live like Jim Breyer in Austin, Texas.
You probably need, I don't know,
but we're talking about rich.
Your house would cost you a couple of million, and you need a couple of $100,000 to $300,000 a year to spend.
So you need to be worth what, 10 mil?
10, you'd be definitely rich. You might be able to be rich less than that. But if you live in South Africa, in Cape Town, which is beautiful, $1 million, you'd be rich.
And what about Palo Alto?
Well, 50.
50? So you're rich.
No, I'm not. I wish I was.
And what about San Francisco, where I am?
50.
50? I'm certainly not rich. Well, that's interesting. Young, rich anti-capitalists are coming to destroy the world. Finally.
And the other news was the Supreme Court, Andrew, siding against Texas, which weirdly enough means, in my view, Texas was on the right side of this debate. Even though I'm not a Republican, Texas
You're
wanted.
not yet, but you are a Republican. You just won't admit it.
So Texas wanted to tell Facebook and Twitter that they can't edit stuff based on the content. So it's, on the face of it, at least, a free speech belief.
Yeah.
The Supreme Court sided against Texas, saying no, they can edit, but they only did it in order to delay a decision because apparently there's another court looking at the same issue. So this isn't going away, and it hasn't come to a final result yet. But I think it's kind of important.
Well, the startup of the week is connected with that, and that is kind of important. What's your startup of the week this week? Another small little company no one's ever heard of, Keith.
It's Twitter with a red logo.
Twitter.
And why? Because they're apparently bringing back a feature that our good friend Steve Goldmar used to love called Track. And this feature is one where you could track the use of a keyword and create alerts surrounding it. So in my case, I could track, Elon Musk or Tesla or electric vehicles and basically get a stream of hits against that track.
It's astonishing that to me that they would have ever eliminated that. I mean, why would you not want to have that? I mean, it's a basic way of searching Twitter, which is often frustratingly unsearchable. So why wouldn't you want to have that? How did they eliminate it, and how are they putting it back?
I think eliminating it was mostly the technical challenge of supporting it. You can imagine it's a lot of scale needed to be able to have hundreds.
Why couldn't they just outsource it to Google or something?
Could have done, yeah. Well, if they would have opened up their index to Google, Google already would have done that. I remember Steve being extremely upset when they stopped it. And you're right, it kind of was a bit of a...
When Steve is extremely upset about that, what does that... Does it mean he goes into a deep depression?
Oh, yeah.
Because you can't search his name on Twitter?
Oh, he wasn't searching for himself. He was searching for other things.
I think most people would search for themselves.
Well,
can you do that on Twitter?
You can, but if you're like me, not much comes up.
Yeah, or me. And what's the current Elon situation at Twitter? Are they in the gray Elon zone, or the good or the bad Elon zone? Who knows?
Well, the Twitter management this morning put out that the 30 days during which the merger authorities could have objected have now gone. So there's no government objection. So now it's up to whether Elon closes. But I'll repeat what I've said every week since. I don't see any reason on earth why he would pay $54 a share for Twitter right now. He'd have to be nuts.
Well, the question is whether it's worth $1 billion or $2 or $3 billion fine he's going to get, right? Because he can't get out of it for free.
No, he can't. Yeah,
and there's also there's an element of public humiliation. He said he was going to buy it, and then he's going to say he isn't, and he can come up with any excuse, but it doesn't make him look good.
No, I think it's hard for Elon Musk to look any different than he already looks. He's out there. He's a performer as well as a clever guy who likes having fun with people. He is who he is, and you either love him or hate him, or you're neutral. And I don't.
And I think what my sense on the Twitter front is it's like the Amber Heard, Johnny Depp stuff. It's a classic feature of our social media age. When it's happening, it seems the most important thing in the world, and the next day everyone's forgotten about it. And I think ultimately it's irrelevant. Who cares? Who cares? Firstly, who cares about Twitter? And secondly, who cares who owns it? It doesn't make any difference to anyone else.
Yeah,
Except
I
maybe
personally,
Elon Musk and maybe the people working there, but nobody else cares. And even whether or not Trump gets back on, I mean, Trump's yet talking. I know you've got this Hegelian yesterday, tomorrow's news, blah blah. I mean, Trump is yesterday's news. Elon Musk's challenge is not falling into the Trump category and being yesterday rather than tomorrow.
I agree. It's always more important what you're going to be tomorrow than what you were yesterday.
So, startup of the week is actually startup of last week or yesterday, not tomorrow. Maybe tomorrow we can, or next week, Keith, we can have a startup of tomorrow. And then what about tweet of the week? An interesting tweet this week. Or you got two. You sometimes cheat here.
I got two because they kind of relate to each
Is
other.
that because we're living in inflationary times?
Exactly. So Gil Dibner, who is an angel investor, made fun of Sequoia and Andreessen by saying,
which isn't hard either.
I can't help myself but think about platform funds that have recently launched accelerator programs. And if you go and look at what then follows, he goes on to tear them apart for pretending that they are accelerators when really they're not. So he's basically calling them out for being fake.
And this is also part of your whole Tiger narrative of every venture firm invading the territory of
the earlier stage.
Yeah, so they're trying to go forward a step or back a step.
Exactly. But then stonks.com, which is a parody, does a hilarious Twitter thread making fun of, he may have deleted it. Let's just look. I think he may have deleted it.
It got stonked on, Keith.
Yeah, he got stonked on. But basically, it's a parody of venture capital. And he pretends he's a venture capitalist. He does a day in the life of a VC analyst. And so he answers the question, what does he do in his day? I can only recommend that let me just try one more.
I'm going to have a word with Mr. Stonk because you need to be parodied. This idea that Tiger down 52% is not bad news.
Yeah. Anyway, it looks like it's gone, but it was hilarious.
Well, let's hear day in the life of a VC analyst.
Yeah, but
you live to tell the tale.
When I click on it, it doesn't come up.
Well, we still can see it.
Yeah, but you can't see. There's like 50 tweets underneath it that are going through the average day in this VC analyst and what he does.
Do you think that the venture capitalists are parodied sufficiently? I haven't been watching these television series which make fun of tech companies. I assume that the VCs don't come out of it looking very good.
Silicon Valley on HBO was hilarious at that. And then you've got more considered ones like Halt and Catch Fire, which were not comedy, but quite accurate about the early 90s. I think, it's hard because, look, within venture capital, when 90% of your investments fail, there's a lot of scope for comedy and caricature. But the fact is the 10% or even less that succeed shape the world.
Right. So I don't think that's where the parody is. I don't think anyone would argue about that. I think it's the hypocrisy often, or the absurdity of it. That's their model. Everybody knows that you have a handful of winners and mostly losers. That's just the way the business is.
Yeah, but that means there's lots of on the record early investment speeches about how awesome something is that turns out to not be awesome. Like Webvan is the classic example. But on the other hand,
Coinbase today, right? We've heard a lot about Coinbase. Every time I read anything about Coinbase, it's bad now.
Yeah, I think Coinbase is going to be fine. There's 2 articles this week in the newsletter about FTX and Binance that are competitors to Coinbase. And FTX just became bigger than Coinbase. So those are growing markets.
So what's the Webvan of 2022? Is there one? Of the web?
Probably
crash.
Probably OpenSea could qualify. The NFT.
Well, I hope, Keith, by next week you will have made up your mind whether it's a good or a bad week. We can't do another good or bad week. Neither.
We need something definitive to happen.
We need either the world to end nuclear war, perhaps, or environmental catastrophe in a
Yeah.
week, which is a lot to ask. Or we need Cheryl back. Maybe we can invite Cheryl onto That Was the Week. If she's watching, Cheryl, we'll give you a third seat in our table.
I think
We'll have you, Cheryl.
she's such a good operator that she wouldn't be seen dead with you and me, Andrew. So
She definitely wouldn't be seen dead with me. How about you? I'm not sure if either you or I would be seen dead with her either, or we would be so spanked out of our existence, so bossed about that it wouldn't be a lot of fun.
Exactly.
Well, that was the week for June 3, Keith. Continue to do your stuff. Continue to build unicorns. And we will see you all next week, everyone. Have a good week.
Bye.